29.8 at the moment.
Hmm.
We were down under 29 not that long ago here. I think we wicked down to 28.7, it looks like.
The stream is up and running on
Oh,
my.
beautiful.
Yep.
I'll get it. Okay. All right. Going up to the YouTube. There you are. All right. Excellent. Oh, is that me? That might be my other monitor that's doing that. Okay. Had some background noise coming in. It looks like I'll have to. My second monitor's got audio on it. Okay. Let me grab this link.
Do you know if the audio is coming through?
Oh, that's a good question. I just turned this on. Let me go over there. Okay. Oh, is that me? Oof, we got a lag again. It's coming
lagging.
through. It's background noise coming in. It looks like my second monitor's got audio on it. Yeah, we got quite a lag again.
I wonder if it's my settings here. I was hoping it remembered everything, but knowing my luck. Let me see once.
It remembered everything from this morning.
I should double check that. No, no, it remembered everything from this morning, so.
Yeah.
And it says no dropped frames.
So, but you are getting.
So that's
live stream.
That's interesting.
YouTube.
Okay. All right.
It's just laggy.
Yeah. Oh well, it is what it is. So, but you are getting audio from the live stream from the YouTube?
I am.
Okay. It's just laggy.
It is. Yeah, it's off by a bit.
Okay.
Okay. Well, that's great. I'm gonna just get this tweet composed, and then I'll share it out, pin it, and we'll probably start this thing in about 5 minutes or so, and
Sounds good.
officially start probably 8:03, 8:05 type range. See if we get some other people that wander by.
Check 1 2. Check check check. Okay. Yep.
All right. It looks like
Right.
the pinned link is on the top there.
It's just,
Okay.
you
And
gotta be too
it looks like
techie
we've got
geared
our
heads
whole
to pull this
infrastructure
off
set up and ready to go
it's
prior to
like
this thing
really
launching.
good.
Look at that.
Yep.
Just
That's
like
look pretty good.
just like pros.
Right.
Yeah.
Oh, it's just, you got to
Part
be
of it too
two
is
techie gearheads
seeing
to
if we
pull
can do
this
it.
off,
When we
and
first
as
talked about
fast as
it
we
in
did.
theory, like we're like,
Yeah, I think
yeah, you
it's
should,
pretty awesome.
you know,
This is
should
neat
be
that we're going to be able to do this.
Yeah, it is pretty
Right, you
cool.
should be. Right. And then you see
Part of it
when
too
you see it
was
come together,
just
boy,
seeing if
there's
we could
something
do
about
it. Because
that,
when
you
we
know,
first talked about
whatever
it,
that
in
is,
theory, like we're like,
the
yeah,
desire
you
to win.
should, should be able to.
You should be able to.
Right, you should be. Right. And then you see it actually
Right,
when you see it
yeah.
come together, boy, there's something about that, just
Right,
whatever that is,
exactly.
the desire to win.
Yeah, I get that 18 music playing in the background,
Right,
Hannibal
yeah.
smoking on the cigar.
Right.
Love it when a plan comes
Right,
together.
right. Yeah, exactly.
Well, don't you think YouTube?
You can only do
Couldn't you do it all through YouTube?
so people can only chat back at you.
Good question. You could, I bet. I think
How do
the
you get the
only
audio? How do you get the audio
yeah,
stream? How do you get community audio on YouTube? You can do chat through YouTube, but I don't
you
know how
can
to do
only do
audio.
chat. Yeah, you can also
Probably,
so
yeah.
people can only chat back at you. Yeah.
Yeah, we wanted to open this up so people could just, because it's a pain in the butt to type all this stuff, and quite honestly, I'm expecting maybe 5 guys to show up from the group to sit down and do a deep dive and talk about this stuff. So rather than have to sit there and type, it'd be nice to be able to just open up the lines and just chat and go through this real time.
Right, and I imagine there's probably other platforms that we could be experimenting with. There's so many ways to go about that. Oh, so remember I was talking about this thing. It was a software that let you kind of be a broadcast sort of.
Right.
You're able to look kind of professional in your broadcasting, kind of like TV station quality, but software as a service through the web. I think what it was, if I'm not mistaken, I think it was live stream. And I think live stream was purchased by Vimeo.
That makes a whole lot of sense. Okay.
Mm-hmm. Yep. So when I was playing with it, of course it was free, but now it might be a little expensive. And the only reason I think that is because when you go to the pricing page, they don't give any prices.
Sure.
Yeah, so that always makes me suspect. Oh, well, it might be a little pricey then if they're afraid to show off what the prices are, off the bat.
Yeah. Well, I tell you, this software price was right on the software.
Well, yeah, open source, you can't beat it. Oh man, how did you find this?
Google. I searched. I ran across it. I stumbled across it. What I did is I was trying to find out what other people were using.
Okay.
And I think I looked at maybe 10 other pieces of software that all had price tags on them, and then this one popped out as this free option. I'm like, that's about the right price for right now.
Yeah,
I like that.
Right, I love it.
That's powerful enough for us. So.
Oh yeah. This is. I can't believe. I wish I could. Well, I could. I could actually share the actual screen of OBS, but I think what it does is it gives you that mirror tunnel.
It does. It's pretty cool.
Yeah.
It's all like.
Right. Yeah. It looked when I first lit it up, it was doing that, and I was like, oh no, did I break it? What's going on?
Yeah. I know. I didn't know what was going on either when I first started.
Yeah, but and very intuitive. I wonder how many people know about this.
Yeah, it's a good. I mean, it is some pretty nice software. It's pretty powerful. I mean, like, there's more there than anything we're touching right now. I mean, this is probably like 1/10 of what the thing can do.
Right.
There's so much stuff there.
Yep. We'll have to push it.
Yeah, we'll have to. Yeah, see what we can do with it. Right.
Right.
All right. Well, I'm gonna say we'll kick this thing off. I'm gonna read my advisory notice. That way, when anybody plays back, we've got that out there. So please note that today's conversation is for informational purposes only and does not constitute legal or investment advice. We may make forward-looking statements today, and actual results may vary materially from today's statements and are subject to risks and uncertainties. Please do your own research. You are responsible for the decisions you make. All right, Jay. So, the crypto markets have puked. They have puked, my friend.
Yep. And where were we? Let's see. This morning, we were right about near the 30, kind of slightly below. So it was around, what is today, the 11th? Yeah. So it was like 10 in the morning, 10:30, right?
Okay.
Yep. Well, wait a minute. I don't know if I'm set correctly on the time here, but I could have swore it was somewhere. Oh, wait a minute, because you were talking. Were we below 30 when we were talking earlier?
Honestly, I mean, we were bouncing around 30, and we had talked that it was probably going to get ugly if we went down below 29, because I think we were looking at the those Aurochs charts, and
Yeah.
there was some lines 29.5.
Mm-hmm.
And I'm like, well, we closed below that. That's gonna look pretty ugly in the daily.
Right. And we were excited to talk about it later on because we didn't know if it was gonna kind of do what it did before and reject off of the kind of the 29s area, or and if we were gonna test above 30. But here we are. We came down. So this was interesting because I haven't looked at this all day. We came down. Holy cow! We dipped down to 27s. We were 27,700. Even.
Wick, yeah. Wow.
Yep. Look at that wick. So, and this is a 5-minute chart. Yep. So, what's interesting then? I don't have the volume up on here. I should quick pop that up just so we can see that. Let's go. I should have that as a favorite. I think all the way at the bottom. Yeah, volume. So let's see what the chart says for volume.
And this is neat.
So we got a bit of a lag here. I imagine you guys see me searching for the volume indicator by now.
So we had the 30,000 mark.
Yeah.
Kind of marked
Yep.
with a little resistance.
And this is neat.
Look what happened.
We drew at the 30,000. So we had the 30,000 mark, kind of marked up with a little resistance line. And look what happened. Not long ago, we came up and danced and tested that area, and it rejected off of that. But looking at the volume, look at the wild swing that happened today earlier. Looks like around 7:30 this morning. Yep, 7:30 exact. Look at all that volume that came in.
Yeah, it's quite a bit.
Yep.
That's a tremendous amount.
Now that brings me back
That's when market opened.
That's when market opened. Now, market for the retail is opened 8:30 Central Time, but the big boys, if you're part of the Wall Street Club, you get to start playing at the casino at 7:30 in the morning, and that's when Wall Street started to get busy. So isn't that interesting?
That is actually incredibly interesting. It's an interesting correlation, Jay. Thanks for sharing that.
Mm-hmm. Yep. And so we had a big battle, stuff dived down. Holy cow, and look at that. Very quickly, within 5 minutes, we dipped down from the 31,500 area, and within, looks like 10 minutes, not even 6 minutes, we were already down to below 30,000. And then it got very heated exchange in buying and selling activity, huge amounts of volume. And then we sprang huge candle wicks back right up to the 31.5s all over again. Look at that.
Yeah, that's pretty wild. Now,
Yep,
these markets are open 24/7. Why do you think that that's when the volume would start? Is it just because that's when people got to work or they're ready to trade? I mean, like, why would that be?
You mean it's 7:30 in the morning?
Right.
Well, that's because that's the institutional. That's the institutional volume.
Well, again, though, these markets are open 24/7. I mean, they shouldn't.
Oh,
They're not
oh,
constrained to,
right. Yeah. Well, that's how it used to be, right? I remember enjoying that about Bitcoin. Oh, well, I liked it and I didn't like it because we talked about it. You go to sleep in a position, and then South Korea would go and get busy trading, and next thing you know, you'd wake up and you'd be like, "What happened? What the heck?"
Right. I remember.
Yeah, those were the days we didn't sleep.
Right. Yep. You get up in the middle of the night checking your phone, right? So now, and I just read an article about this. I found it on Zero Hedge, and it was I don't know who the analyst was, but it was a interesting because we were just talking about it, and I'm like, why isn't anyone talking about this correlation between the stock market and Bitcoin? Like, no one's talking about it, but this article highlighted that, and I thought, okay, good. Now we're getting, it's starting to make sense because I'm not the only one that must be noticing this, right?
Right.
Yep. So if we pull that up, actually, now that we're talking, and pull up the S&P, let's go and add overlay. Let's use let's see which one is the bigger one. This one will probably work just fine. Yep, that one will work. Okay. So here in orange, and I should probably take out my moving average lines now. Let me hide those. Okay. So it'll take a while to populate on your screen, but you'll notice that there's an orange line now, zigzagged line, and I should probably change that color. Let me make that blue, just to make it so we can see it a little easier. There, and I'll thicken it up a little bit. Okay, so now you see the zigzag line it was orange, and it's probably going to turn blue for you guys in a little bit. But you can see I overlaid the S&P. And Bitcoin, of course, is dancing around doing whatever, but we're on average volume all the way up until we hit 730. And that's when you start to see the heavy volume come in and take Bitcoin down. Now we don't see a change in the S&P on the line until it hits 830. But look at how Bitcoin was quick to recover and move in tandem with the shape of the S&P. Now, it isn't literally dollar for dollar in tandem, but if you do notice that the zigs and the zags, the actual shape of that line mimics the behavior of the Bitcoin chart. See that?
Mm-hmm.
Yep. You see the pivot low on the S&P, and then the pivot low on Bitcoin. And then you'll see, like, a little after that, like around 1 quarter to 2, you'll see a little pivot high on the S&P, and then there's a pivot high on Bitcoin. So anyways, that went on until market closed. And then Bitcoin, of course, kept moving. So there was still a lot of volume. Look at how much volume continued even up till now. We're starting to get back to that, mean average in trading volume after the U.S. market, institutional trading, started moving that market. So that is really interesting to note. So now it seems like, we talked about, okay, what's Bitcoin going to do now? And when you're saying, Mike, you were saying you sensed some downward pressure and you felt that it could continue. Well, that is my sentiment. And the reason is because there's so much selling off on the stock market, and it's dragging everything. Historically, when we had downturns in the stock market, it always pulled all the other paper markets down with it. So it would pull down gold, it would pull down silver, it would pull down just all these derivatives, you know.
Right.
And eventually, what happens is when you get so far down, when it starts to really push down so far that they start calling it, instead of a correction, they call it like a major crash, like a
Okay.
recession. Yeah. Then what happens is you start to see a decoupling in what's considered the safer markets, like the precious metals, and that's the decoupling that occurs historically. But anyways, in the interim, for the most part, when the stock market crashes, it takes down all the related paper markets with it. That didn't happen before. And the article was actually going on to talk about how, because there's so much institutional trading now that's occurred they literally dominate the crypto markets. So they are the ones that are moving this market. And because of their risk assessments and the way they have to handle their money, they use the same analysis tools that they use when they're moving the stock market. And that is why Bitcoin is now behaving in alignment with the stock market.
It's
Well, I looked at GBTC. That's
it's
at
great. That's
and
grayscale, right?
yeah, the grayscale. You can get Bitcoin, the grayscale fund, at a 26% discount right now.
Okay, how do I see that? Can I go on TradingView?
I don't know if you can. I just went into Google. I just typed it into Google, but I did it earlier today. And if you look historically, it's been trading at a premium. I mean,
That's
even
right.
like a crazy high premium. I think the highest was 63%.
So I go on to Grayscale Bitcoin Trust. Is that what it is?
Yes.
Yeah.
Oh, here it is. GBTC. Uh-huh. Let me just see this one thing here. It looks like it took me to I clicked on a Yahoo Finance. So now help me understand this. I might be doing this wrong. It says here Grayscale Bitcoin Trust BTC GBTC, and it says I believe it's $19.09.
No, you got to go. This one's called, I went onto this, it's ycharts.com. That was the link I found. But yeah, that'll tell you. Well, that gives you.
Y charts. Mm-hmm.
I just found this link on when I typed into Google. It's ycharts, and
Here it goes. I think I found it. Oh, that's weird, because I'm still coming up with this Grayscale Bitcoin Trust at $19.09. I must be doing something wrong. Yeah, I'm doing something wrong. But anyways, now you're saying that the price right now, let's say, is there a way anyone can look that up?
let me see where I found it earlier.
So you're saying though that it was trading at a premium.
No, you have to pay for it.
Oh, they won't let you. Don't you love that?
Of course.
I love that. Yeah. We're not doing that. So you're saying though that it was trading at a premium. Give me an example, like what kind of, like.
I mean, I'm talking over the history.
Uh-huh.
I mean, it was trading at a high of 63% above the actual Bitcoin price.
Above spot. Oh.
Above spot.
Are you seeing like in the 40,000s, something like that?
That was a long time ago.
Oh, a long time
I mean,
ago.
I can see like from March 1st, it was trading at a negative 24.9%.
Mm-hmm.
So you can get Bitcoin May 10th right now. It's 26.75. And that's what the institutions are. They're in the GBTC.
Mm-hmm.
I mean, for the most part, I think for the most part right now, I mean, because you can trust them, I guess. I
Sure.
don't think you can.
Well,
Some of them
yeah,
are probably
they're grabbing it up from all over the place probably because they're taking any instrument they can, and a lot of them also engage in arbitrage, where they'll see the differences in one market to the other, and then what they'll try to do is captivate that spread. So that's another big thing that's happening, but they are actually going in to the Coinbase exchanges and to the Binance exchanges. They're big customers. A lot of the institutional traders are big customers to Coinbase, Binance, and all the exchanges, and they're buying spot. They're buying and selling spot Bitcoin. So that's yeah, that they now run the show. They now, but yeah, and that's not to say that they're going all over the place. They're going into, and also the futures market. They have the Bitcoin futures and the Ethereum futures. They're again huge amounts of institutional money is in those markets. So yeah, they're all over the place. This is now their game. So now what I'm trying to get at is we no longer, when we want to trade the altcoins, we used to look to Bitcoin to trade the altcoins. Now, what I'm saying is we need to take a step even further out and start to refer to the S&P instead of what you used to, use Bitcoin to do as your gauge. You now have to almost look at the S&P as your gauge, and that's what I've been doing. So I probably won't be making any purchases or any big trades until I have confirmation that the stock market is going to give the indication that's going to turn around and rally.
Well,
Well, that's interesting.
Bitcoin has never been through a stock market recession. Real, a major one. So this is kind of uncharted territory right now.
Right, it is, and that's where historically we thought, because we visited. Remember let me pull up that Aurochs chart, because then we have it drawn. Yeah, here it is. So we had we looked historically, and we knew that Bitcoin was going to come, to this 30,000 mark, and it rejected off of that, and that was really strong support. And look at all the volume, the fighting that's going on, right? So here we are again, and we don't know. That's the question mark now. This is the real big test, where if we could, this might be a heavily defended area by a lot of institutional money that is invested in Bitcoin long term. And what I'm hoping will happen, this is optimism, is that we'll have that rally off and bounce back off of that 30,000, and then make another leg on the way up. But because of the stock market, and now that we're running in tandem with the stock market on Bitcoin, and it's not just me seeing it, now we have published articles by the institutional money that's actually agreeing that, yep, they basically all know and understand that Bitcoin is now tracking and running in tandem with the S&P. So that's where, if we do break down, if the stock market continues to bleed out, we probably will see Bitcoin being pulled with it. Which, if we were if we were in an organic Bitcoin market that wasn't influenced so much by institutional money, we would have a more organic behavior here, I think, right?
Yeah, I think there's a couple of interesting points here. So from a larger institutional proportion of portfolio, micro strategy. As of February 2nd, the information I have indicates that their average price is $30,200 per Bitcoin that they hold.
Yeah.
And I think we talked about that in the past, where that 30,000 level really is a psychological number.
Right.
And it's interesting to see how, if there was some external force that propelled this specifically down with Luna and UST, because obviously something happened there where that broke. Whether that was intentional or not, good question. It seems like it could have been, and that started this cascade effect that really brought things down even faster than what anybody had considered, because this thing fell apart and unraveled quite rapidly. So now the chart has been made down to 30 in a very expeditious manner. So this is where we're sitting, because that's our next break point. This is the next point everybody's watching.
Yeah.
Well, I kind of have a little conspiracy theory on the whole Luna thing. I mean, what's the fastest way for Janet Yellen and the government to regulate it? They cause something like this. She gets her buddies from Citadel and a couple of the other hedge funds that she used to work for, crash the price.
Oh, and so what you're saying is the volatility. They might point the finger and say, "See, it's too volatile.
Well, Janet
we need to regulate it."
She came out today, and she made comments about it.
Oh, no kidding.
So then she said there needs to be regulation, and I think this is their big push to regulate it, which could be.
Yeah. Well, back up one second. Now, I'm not really in tune with a lot. You guys have mentioned, I heard earlier, you guys mentioned Luna. I heard buzzwords. I don't know what's going on with Luna. You guys got to fill me in here. What is the story with Luna?
If Mike, you probably know better than me. Well,
macro level, Luna has a stable pegged coin. It's an algorithmic coin, and it's supposed to be set up so it's pegged to the dollar using crypto as a backing, and that peg got broken because of downward pressure. And the way the mechanism works in order to provide stability is what causes the waterfall effect, because the treasury had to sell off vast amounts of their Bitcoin. As a matter of fact, from what I understand, they may have exactly exhausted all of their treasury in order to try to reinstate the peg. And this is why there's a lot of talk out there about this being something that somebody started and put in place, as in manipulation.
Wasn't Luna? Aren't they one of the top 10 largest Bitcoin holders over just the last couple months?
Yeah, and they were number 3 stable.
So you're saying, Dan, that
so this is and this is I don't know where I heard, but I think Luna has crossed somewhere. I heard about it, and I don't know where because I don't pay enough attention. But so you're saying, Dan, that Janet Yellen actually mentioned something that had to do with like the general cryptocurrency market, or specifically with Luna?
She referenced a Washington Post article that came out about the USDT.
Okay, and USDT. Now that's another one that, man, I don't know a lot about cryptocurrency. I'm a chartist, right?
That's the Terra Luna algorithmic stable coin.
So that's UST, not USDT. USDT is another one, and that particular one, best information we have is that it's not fully backed 1-to-1. It has other assets. Now here's the quick down and dirty. I've got a tweet that somebody had put out that kind of covers the macro. So the idea here is that the Citadel borrowed 100K BTC. They trade 25K BTC for UST. Okay, so that's a Luna stable coin. They open a short, start dumping 75,000 BTC aggressively. Once BTC reached 30, they start dumping UST to make it lose its peg. Okay?
So it's
And
like a
then-
manipulation?
Yes. Now the Treasury was forced to sell 25,000 BTC at a major loss to try to recover the peg. And it further dumped the price. I mean, it's the cascade effect. Meanwhile, the people, the speculation is that the people, the Citadel that started this, opened shorts and have been shorting the whole way down.
Janet Yellen
Mm.
saying, "Look, this is
I see.
like manipulations."
So because of things that are running in the background with these stable coins and with these other organizations that exist, Janet Yellen is coming out saying, look, this is like manipulations, obviously, that, you know, it's not backed by whatever, or anyways, it's volatile. We have to clamp down on this.
Pretty
Yeah.
much. I just sent a CoinDesk article. I texted it to Mike about, she was in a Senate hearing today, and she came out and, you know, brought up UST and the risks and how it needs to be regulated. So I don't know exactly, but I really think that this is their way. I think they had a hand in the UST debacle, and it's their way to push for regulation.
Right. Yep. And of course, whenever they push for regulation, it usually benefits someone or many, parties, and that's the stuff we never get to hear about. But yeah, who knows what the mission or the purpose is, because all the markets to some degree are manipulated, and it's a good old boys club, and we're not in it, right?
No, we're definitely not.
Right. So whatever the purpose is, and they already said, the funny thing is that when the Fed, anyone from the Fed or the Treasury speaks, the market responds. They hinge on every word. Sometimes I wonder, like, this has been going on for so long. They know that they can get the market to move a direction, and they can get it to recover and rally simply by the way they twist their words. And it drives me crazy when they do it, because it's just a giant game, whenever the markets start to really crash, they can, the S&P can turn around whenever they want it to, and it's going to be when they want it to, right?
So I'm looking at the RSI on a daily, and I am seeing that the point that we're at has only been broken through 2 other times, and that was back in that 13th, 15th of 20. And then back in November of 18. So, as far as, looking at indicators and understanding, where this thing and the tenuous nature of where we lie, that's another interesting point to garner here, because we have only 2 other touch points in that area, and that was September 29th of 19 and November 26th of 19. But the two breakthroughs. So there's really, I mean, we're down. This is low. This is incredibly low on that RSI, and it feels like we're headed further down too.
Yeah. And that is that's the trick when you're looking at the stochastic or the RSI. When you do start to hit past the whatever you got the 30 mark, when you start breaking down below, that is supposed to be an indication that you are in a bear market. Yep.
Yeah, I had picked up a trick on the RSI to set it to 90 and 10, because that was more because of how
extremes.
Right. exactly. It was more fitting for the moves in crypto versus
Mhm.
traditional markets.
Sure.
And when you do that, you look at that. I mean, there's very few times we break through 10.
Hmm.
We're getting close.
Yeah, yeah. I do notice, let's see here. Um, well, I was just looking at that RSI. Yeah, that is a tough one. That's a tough one. We are in what would this looks like the lead into more downward pressure, the potential for downward pressures there. Um, Again, I guess if the S&P opens and continues to open and and we do continue to move to the downside, it's going to keep pulling Bitcoin with it. Um, Not to say that when we do have that overlay of the S&P, let's go to now I'm on the daily here. So I just flipped over to the daily chart on Bitcoin back where I have it overlaid with the S&P because I can't do that with Oryx. I can't overlay the S&P on Oryx.
Yeah, there's a couple of things you can't do, including the Gaussian channel, which is another one that Dan pointed out for an indicator. If you throw, after you do what you're going to show here, take a look at putting the Gaussian channel
Oh,
on Bitcoin, and you can see this this thing fell through the bottom.
sure, sure. Yeah, so what here's the thing. When we break, we talked about how the S&P, the blue line, keeps acting like the mean, the center.
Right.
And where the heck, why am I not seeing where we are right now? Okay, I guess it doesn't matter. But anyways, when we break above the S&P, it really can overshoot it. And when it breaks below it, it can really overshoot it. So if we come back and test the mean on the S&P and break above, we really could overshoot that. There's that potential. Even if the S&P it has a small rally. So if the S&P just has a tiny rally, we could see Bitcoin rally, cross above, and really overshoot it, kind of like it potentially has before.
Love
And
the
I don't.
hopium.
Right.
Yeah,
Yeah, I know. We're probably going to move down further. But well, see, and that's the thing I can't really say because, we don't know. We just don't know what's going to happen. There's a lot of people banking on though. There's a lot the chart is behaving in a way right now that it's behaved before. And you can tell by all this volume here. I flipped over to the Oryx chart. And like I said before, you look at that volume every time, once we established the 60s, the 60,000 area peak, when it came down, support was established at 30,000. And look at how heavily it was defended each time it came down to that area. And it's doing it again. There's a huge spike, huge amounts of volume that are coming in. And it's a battle. I mean, the amount of money that is being thrown around right now on Bitcoin is unbelievable. But
Yeah.
that's the only thing that makes me think this may have a chance to cling on to that 30,000. If it did break down, of course, the S&P has the potential, and of course, faith in the I guess they call that trading sentiment. If it did break down, I don't want to think where it could go because it could really get ugly. I really am clinging. I'm clinging on to the hope. I am. I totally am. I'm clinging on to the hope right now because I think it could really destroy a lot of confidence in Bitcoin. And like Dan was saying, maybe that's the plan. Maybe the idea is maybe they got something ready. The Fed might have something ready to roll out that is going to be the answer to the cryptocurrency market if it does, if faith is lost in it. But it's hard to believe that that's possible. Well, anyways, so any idea what kind of targets we would be looking at once we break below 30,000? If we break below, anyone have a clue? It could go anywhere, but do we use
Well,
historic areas as support.
Yes, the Bucks won, guys. Sorry,
Yep,
Nice.
Bucks won. Woo! We
Well, we
needed
should.
that.
the Bucks
Ah,
won. The Bucks
Yeah,
won.
the Bucks won. They
Oh,
won.
that is awesome. My kid is downstairs watching play by play, literally because he can't watch the game, so he has to just watch the score, and he's literally refreshing his phone because we don't have an antenna. We can't figure out how to get it, but anyways, we're gonna go pick up an antenna so we can watch it. So I can't wait to get down there later and celebrate. That's awesome.
Yeah, that was a good finish there. We were down by 13 with a few minutes left, and we
They
came back.
pulled it through. They clinched it good. So now, I'm just going to go ahead now and draw in some historic support areas that we have here, because that's all we got. That's all we have to go on.
I mean, 20,000.
is weak.
That seems to be.
Here
That's
is
that's the next 18 to 20 range, right? I mean, we could see some level of support around 24, but it's incredibly weak. The next largest is that 18 to 20, and then real support comes in around 12, 8 to 12 range.
Yep, and trying to look here and get any sort of, the real trick is going to be when we talk about support, what that really is for the most part is psychological numbers where people got in or people got out, but then also the perception of what is considered expensive and cheap. And that is going to be the interesting part, because if we do break down below 30, at what point are we going to hit the numbers where people, because we have fear right now, there's fear in the market, right? But
yes, as a matter of fact, let's just take a quick look and see. Our fear and greed index is currently at 12. Extreme fear.
Okay. Yep. Okay, that makes sense. And we can see fear in the market many times before.
Historically, on other bear markets, where does the fear and greed index usually fall? Anyone know?
Okay. So usually what happens is the fear is the panic selling that occurs, and then capitulation, where people finally said, okay, I'm out, I fold, I'm done. But then what happens is when it hits this certain point, they can only sell. When they sell, they have to sell to someone. So if they have no one left to sell to, if there's no one else to sell to, then it starts to consolidate sideways or just remain almost stagnant, where the market makers are just like, it's probably bots against bots, just moving things sideways, and then finally you get price discovery where they start to say, okay, this is now considered cheap, and then you start to have the bids that take that price higher. So it's cyclical. You can see it in this chart. You can see it in every single chart that exists. And I don't know what the fear greed index is, but I'll tell you now that it's going to switch. And it switches kind of quick in a lot of these markets, where right now there's panic selling, and then it'll finally level off and it'll start to move sideways. And then all of a sudden it's going to go from the fear, and it'll start sliding over to greed. So where are we in that? Where are we in that? I guess, what would you call that? That cycle. Where are we in that cycle now? You can see, if you look back on the Bitcoin daily chart here from like May 13th of 2021, and you can see a huge sell-off occur, right? And it lasts for like, I don't know, it goes all the way until the peak down low is like the 19th. So that's about 6 days. Then it rejects and it starts to consolidate in this channel, right? And that goes on from May all the way until July, mid July. And so then we have this rally that starts. So right there where you see on July 22nd, that's where
can we
that,
zoom in on that a little bit? I
yeah,
just want to see the wicks.
Yep, absolutely. Let's see here. Let's pull that up here. Let's do that this way. So, oh yeah, I even got to zoom more in. Hold on, I'm gonna really zoom in on that. Let's get closer. Yeah, there we go. Now, am I on regular? Yeah, I am on regular wicks.
Yeah, okay.
Zoom in a little more.
We can see that.
There we go. Can you guys see my chart yet? I'm kind of moving stuff around. It's probably going to take a second.
On the days before that rally begins.
Yeah, okay. So we can see that we have consistent. Well, before that, we have this, if you look at the volume candles on the days before that rally begins. So any roughly between the end of June all the way until looks like around July 21st, you see this tight consolidation occur in this chart, right? But it's kind of moving slightly down, right? And then all of a sudden you start seeing this rally occur where an increase in volume of buying volume, and that's what changed the sentiment. And once that volume came in and more buyers started to dominate, and then the price started getting bid up, it looks like there was a little insecurity. It was still more buyers. Like I said, on these candles, these bars, volume bars, the only downside is I can't tell how many sellers to buyers there were, but I'll tell you now, there was of course more buyers than sellers. It would be neat to see though the difference, like how many sellers to how many buyers were in that candle. That data exists. I just don't know how to get it, at least on here. But look at what happens then on the 26th. That's when it really starts ramping up. All this buying volume comes in and starts to take that even higher. So I imagine that fear to greed changed right there. In the mid July, we started seeing that fear, greed index change pretty quick.
Yeah, because it's interesting at the kind of the start of the downfall. You have that big wick, that big red wick, but that got bought up really or pretty quick. And then it took a couple months, and when we switched, it was pretty much at the bottom of that long wick.
Right. Yeah, I see that now. I see that. Yeah, that like on the 19th. Yeah.
But that's what I'm noticing about right now is we're not seeing wicks like that. We're seeing wicks that are just keep going down, and they're printing, not getting bought up.
Right, and that's the thing. You're right. You're right. We're not there yet. We're not there yet. Yep. Who knows where that is, and will we get there? Are we going to see that thing? For all we know, we could dive bomb. This thing could come down and test 24,000, 25,000. Will it last, or will it be one of these, long wicks like we saw in the past? Who knows? It is interesting though, because there's a battle going on right now. The buyers and sellers are fighting it out right now. This is interesting when we come to these points. The last time this happened, I took a trade on Matic, and it was in 2021. Let's think now. I got to really think about when this was. Shoot. Oof, I'm trying to remember. Was it right here? I think it was here in April. I think it was here. Okay, so there was a huge sell-off that happened around the 16th of April, and it started dive bombing down, and I don't know what it was. Everything was so in a bull market that I just really had the confidence that when that thing ran out of steam on its downward selling, it was just going to start, buying to the upside. I don't know if this is the one. God dang, I need to go back in my notes. All I know is I made so much money and it was one day. I just loaded up like $15,000 worth of Matic and I made 5 grand and it was
Oh gosh.
yeah, yeah, it was like one day. But that's the thing. So this can either be once we get past that fear and we start seeing that behavior, I think there's going to be a lot of buying opportunities. Now, this time around, what I think I'm going to be doing is watching to see. I got my moving averages here. I think I want to wait and see. First of all, I want to see us take out some of these previous high pivots. Instead of lower highs, right? I want to see higher highs. And instead of lower low pivots, I want to see higher low pivots. So once we start taking out some of these previous areas, so here's what I'm planning. Once we take out, when we're finished here, who knows where that'll be. But anyways, right now, if it could turn around, I would like to see it take out 40,000. So once it busts above 40,000 and treats 40,000 as support, that's, when I would like to, get serious about the consideration that this could turn back around. And then after that, maybe trading above the 200 period moving average. Wouldn't that be nice?
Ooh. Yeah, because aren't we? I mean, we're coming up on a death cross, right, with the 200-day moving average.
I heard of the death cross, and I don't remember what is it again? Explain it.
It's pretty much where the price of Bitcoin crosses below the 200-day moving average. I mean, there's a couple of different ones with 100-day moving average, 50-day moving average, but
sure.
the 200, they just call it death cross.
Right, and on this chart that I have here, I set my 200 period as blue, my 100 as yellow. So really, yeah, it looks like if we pay attention to the moving averages, we're in a downward. We're definitely in a downward move. I kind of got excited on the 28th of March, 27th, I think, yeah, because we busted back above that blue line, that 200 period moving average. There was no confirmation on the move, though. There was no crossing. The moving averages didn't cross above. Usually what I like to see, I call it moving average alignment. Like if I go back here now, let's go back to, yeah, here we go. September of 2021, the end. You can see I have the moving averages sort of all aligned really nice. I have the blue 200 period. Then above that is the yellow 100 period. Then above that is the 50 red moving average. And then above that is the green 20. So for sure, at least I like to see the 50 period, the red above the blue. That's what I like to see, when I'm considering buying an altcoin or anything. And when that red crosses below that blue, the 50 crosses below. I'm sorry, the 50 crosses below the 200. That's a little bit of a concern then that we're kind of in a bear market, And look at that, we've been kind of bearish for a while.
Yeah, maybe I didn't explain that death cross right. Mike probably knows.
I wonder.
On that, Mike.
Hey, here, let's do this. Let me look it up
once. Or the 20-day EMA will close below the 200-day exponential moving average. The 200-day EMA.
Looks like Jay dropped off on us. Hang on here. I'll invite him to speak again. Yeah, one of the things I noticed when we look at the fear and greed index, there's only a few times that we've really been dropping below 10 on the fear and greed. Most of the time, bounces off the 10. The lowest it appears that it may have been would be around the August, mid to late August time frame at about 5 in 2019.
2019. That's interesting.
Mm-hmm. So if I go back to...
Yeah, that was fun.
Looking at that, that's interesting. I don't see much on the chart that's jumping out at me. We had broken down.
Yep. So yeah, Twitter crash.
Yeah, I don't know. That's strange. Oh, there you go. Oh, looks like Jay requested.
Did you
There you go. All right, you should be back on, Jay.
That death cross again. Did you guys find out what that was?
I think there's a couple different, it has to do with moving averages, the 50-day crossing below the 200-day moving average.
Let me look that up. What is the death cross? I keep hearing the death cross, and I might have learned this many years ago.
That's it's a 50-day moving average crossing beneath the 200-day moving average.
Yeah, see, and that's usually so that okay, it says here there's a golden cross, and so is that the opposite then? Yeah, got it.
That's the opposite.
Got it. Yeah, so and that's funny. I must have learned that a long time ago because that I do that instinctively. Like I always like to reference my 50 and my 200, and vice versa. So now I use the exponential moving.
Use exponential. That's why I was like, that just.
So it's gonna align a lot better when you go.
Yeah, the lines of the chart just didn't seem right from what I was thinking in my head.
Yep. The simple kind of it looks choppy when you use the simple, doesn't it?
Yeah.
Yep. So it's gonna align a lot better when you go to the exponential. So that's what I'm waiting for. I'm waiting for us to start moving and trading above that again. And on a daily chart, there's people that are still able to make money even when we're below trading below the 200 period on a daily. I'm gonna pull up an hour chart. Take a look at an hour chart here. Okay, so let me move this around quick. Get a reference. So of course, right now on the hour chart, this is all very, very ugly. But look at the consolidation sideways. Holy cow, moving. I mean, I'm only looking from right now, April 10th up until I got it zoomed into May 1st. Doesn't that just look almost completely sideways? It's like range bound,
Yeah.
with a slight downward drift. So let me now if you were if you ever hear where they say trend following strategy versus mean reversion, have you guys heard of that?
I haven't.
So what that refers to then is right now what mean reversion is a strategy where if you're in a channel, guys will take the trades from the top ends or the bottom ends of that channel, expecting it to come to its mean average, which is dead in the middle between these two red lines. So you'll see guys are making money doing this, and it just depends. A lot of forex guys will do that. They'll run a mean reversion strategy because it seems like forex it just bounces. They just go sideways, don't they? But anyways, yeah. So in a trend following strategy, you want to wait for sort of like an upward drift or a downward drift instead of a sideways motion. Most of this, well, here we go. Here's a good example. I just zoomed in now. Let me expand on the chart. So this is looking from March 15th. and we see a trend form starting from around March 15th. You can see to the left of my chart, once it gets there, there's sort of sideways motion or slightly, I guess, downward trending motion below the 200 period moving average. We see that golden cross happen right around March 16th. The 50 period, the red, crosses above the 200, the blue. And when that happens, we start to see then we move upward in price, and then it comes back to test the 100 period, the yellow. It keeps coming back to test that 100 period moving average. Even if it does come back and it touches that 200 period, it has so much, upward trend that it just keeps, making new highs, higher lows, higher highs, higher lows, higher highs, little consolidation. So yeah, that would be considered definitely an upward trend. And that's the stuff right there that I love to catch. Anytime you can get even if you're late to the game, you don't have to catch it right when it begins. I like a little confirmation. Once that trend begins, you want to be able to get in on a wholesale price when it comes back to that 50 period. 50 period moving average on the hourly chart, if you're looking for shorter term moves, just catching, like maybe, like Mike, you were saying 10% moves, right?
Yep, 10%.
Yep. And what does that put us? Let's see, 10%. That seems kind of, actually, wow, that doesn't seem so. Yeah, on Bitcoin, that doesn't seem hard to hit, does it? What would a 10% move be? Let's see, that's 400, what, $400 then if you were on Bitcoin, let's say? No, did I do that wrong?
No, 4,000.
4,000. Oh, yeah. Well, that's still, look at that. It didn't take us very long to get 4,000 from the 40,000 mark here.
How do you get the range between the 37 and the 43?
That actually was drawn on the chart from our analysis on the daily chart. It kept it, and I don't know what we drew there. We must have drew some historic
Channeling.
channels. Yeah. Yep.
Yeah, you were showing the channeling.
There's some channels. Yeah. Oh, that's what it was. I drew out the lines. Now that's funny because that was in the future. We were looking at like May when we drew those channel lines. Well, look back here. It looks like price is dancing around those two spots, and this is back further in history. That's what's interesting to me, is that the previous pivots where buying and selling had been done seems to impact price in the future, and that's why drawing those trend lines is important, because it's not guaranteed. You don't know if it's going to go up or down. It just tells you that there's a test that's going to happen there.
Let's see what Oryx would have done back here on this.
So, yeah.
Yeah.
So anyway, shorter term moves on an hourly. I wonder now when you start applying that to Oryx, if we pull in the Oryx signals, let's take this. Let's see what Oryx would have done back here on this, mid-March. Let me pull up the traditional native Oryx. Ooh, that's a lot of lines there. What's going on there? What did I do? That can't be right. Oh, that seems like way too many buy signals and sell signals. I wonder if I did something to the settings. Let me get rid of the native Oryx. Let me go into the BGMC. Wow. Now you were saying, Mike, that they don't recommend these signals on faster time frames. They recommend, yeah. I guess that doesn't help you any. Okay, well, I guess I'm gonna get rid of that. That doesn't seem to help. That's way too many. That's too much noise. Well, here's one thing that I like to do though. I'm gonna quick take my candle. I'm gonna put up a Hakanashi. And now let's see. Okay, so now we're looking at. I'll wait for it to populate on your screens. So here we are back at March 16th. I'm going to zoom in a little so we can see what this Hakanashi candle looks like
Still can't
and center it. Let me zoom in a little closer and then center it. There. Still can't see. I really want to see more definition to that candle, so I'm going to stretch it even further into, kind of around the 15th so we can see what those candles look like. Okay, now it's starting to get a little more definition to that candle. Okay, I think we can see it a little better now. So if you look at the Hakanashi, when we cross, when the golden cross happens, look at the bottom of those Hakanashi candles, right when we have that golden cross around the 16th. You start to see, I'll even zoom even closer. I really want to try to get those defined. Okay, it'll take a minute to populate, but you can see the bottom of those Hakanashis when they start when the wick disappears from the bottom of the green candles after the golden cross. That would be sort of the type of indicator I look for to start expecting the potential uptrend to occur.
So that's something to kind of pay attention to in a
So
That's a good observation.
something that I took notice just from all kinds of different indexes and stocks. So that's something to kind of pay attention to and observe. Yeah. Of course, it helps to be trending above that 200 period moving average, having that I call it moving average alignment, where we have my green, red, yellow, and blue. That's the 20, the 50, the 100, and 200. That's what I like to see. So that would have been a great spot to make.
And it seems like we tested is the yellow the 20-day? It seems like on the 7th, a little before, between the 16th and 17th, we tested it a couple times.
Oh, yeah.
And then it got bought up. If you look at that one red, there's 3 red candles, that wick,
right,
big wick that got bought up right away.
You know what?
And we just kept going up.
That is an interesting observation.
Because it shows support right there.
Yes, that is interesting. Look at the times that has happened, where you had a red Hakanashi with a giant wick, but then it was bought back up. If you look there, there's another one that happened up here on the 20th of March. Smaller ones, but there's even like these little ones that happened. There's in like March 24th. And when it's followed by a green Hakanashi with no wick, that there might be something there. I never noticed that before until you just pointed that out. I think I'm gonna have to go back and review some charts to see if that might be something that happens frequently. That might be one of the leading indicators.
Yep, volume was up.
Yeah, it just shows there's a ton of, support, or buyers are really stepping in there.
Right.
I mean, volume is up.
Mm-hmm. Yep, volume was up
right there.
Mm-hmm. Yeah, so hopefully we can get some more opportunities like this in the future. This is what I'd like to see. This is what I'm looking for and waiting for. It's now just going to be, I guess, a waiting game for this market to turn around.
Yes.
Well, I watch Crypto Kirby. I don't know if he's a YouTuber, but he uses the Keltner channels.
Oh yeah, I love Keltners. Yes.
And I mean, we broke through the Keltner channels, so the bottom range of them. If you look through history, pretty much every time we've broken through the bottom of the Keltner channels, I think it's happened, 3 other times, and it's been, 2018, back was it 2013, 20, yeah.
And is that on a daily chart, or do you know what time frame?
No, that would probably be on a weekly.
On a weekly. Okay.
Helps you gauge that the speed.
Okay, so when you're looking at that at the when it busts down to the bottom side, the Keltner channel is a great it helps you gauge that speed, the speed of the moves, right? And that's why when it busts through, what it's saying is something happened very fast, right? A lot of momentum, a lot of volume.
A lot of volatility. Yeah.
Yep. So it's very telling. Did he does he mess around at all with Bollinger Bands?
Yeah, sometimes too. Yeah.
Okay, sure. That's another one where you'll see a lot of people. I've used both. I actually, on my daily trading, I trade futures, and I use the Keltner channel just to help frame the market. But yeah, I've been using those for a long time. That's interesting. I'll have to look this guy up. What's his name?
It's Crypto. His name is Crypto Kirby. It's I think Mike watches him sometimes, but he's just he's funny the way he puts on his channel. I don't know. He does like 10-minute videos, and he's more macro.
Yeah, and that's the thing,
level.
Sure.
Yes.
Right now,
then
right.
Kind of what you're more talking about is daily, hourly.
Sure. Yep. Yeah, and that's the thing, right now with Bitcoin, my question that I still have in my mind that I'm on the fence. Is this going to be an upward drifting type of instrument, or like such as stocks, or is it going to be a sideways channeling instrument, much like Forex or futures? That's where I really can't figure it out. From what I see now, if I call the chart as I see it, this thing is moving sideways. And will it be that way perpetually, like futures or Forex? That's the big question mark. Because you hear people call it, oh, we're going to see 100,000 Bitcoin. Oh, that's possible. But it depends on who is buying and selling it and what they're using it for. That's what determines how it's going to behave. And that's going to be the big question mark for me. Are we going to just bounce off this 30, make our way gradually, over the next 3 months back up to 60, 65, and then are we just going to turn it back around, and then 3 months pass and we're going to make it back down to 30, and you know what I mean?
Yeah, stay rain bound like that.
Right.
I mean, I don't know. Do you see Bitcoin as just a store of value?
Well, initially, I did for a while. I really did, because Venezuela was going through their hyperinflation, and you heard about people stuffing their paychecks and running to the Bitcoin machines to convert their Venezuelan dollars as fast as they could into Bitcoin. And that was back in like 2018. And that's where that little, aha moment, little light bulb said, wow, this is like a store of value. But now it seems less likely, only because Wall Street, the institutional buyers and sellers, are now controlling that, and they might be turning this into Forex or futures. You know what I mean? So, yeah, but to who, I guess the party that dominates this market and their purpose for it will dictate how it behaves. Right now, I believe that if the trading on institutional level continues, this could just go sideways.
Right.
Yeah, it's an interesting take. Somehow, though, if we look at the macro view, the very macro view, the lifetime, I mean, this thing is definitely trending up, right? We have these periods of consolidation.
Right.
We look at from December of 17 all the way up to October of 20, there was just a lot of sideways movement, right?
Right.
And then we broke out, went to the upside, and now I think it's going to repeat that same pattern again.
It could, but remember, we didn't see. Well, that's interesting here. I'm looking. This is a Binance chart. So this came live on Binance. Looks like back 2018, December 2018.
Yeah, that would have been about when Binance launched.
Okay.
If you do a Coinbase,
yeah,
you'll be able to get a much bigger picture.
Okay, let's see. BTC, USD, and let's look up Binance. Let's go down to Coinbase. Here we go. So I'll do Bitcoin to US dollar.
So it looks like
I see.
really started to
Yeah.
pick up on this thing.
Yep. We got a lot more data. Yep. I see. So it looks like volume really started to pick up on this thing back in 2017.
Looks like Dan dropped off there for a second. Let me add him in. Yeah. That's where the first real big run we hit some phenomenal numbers was right around that 20 range back in December of 2017. And then that was it, So, and interestingly enough, that was another contentious point in crypto history where there's quite a bit that was talked about in reference to the printing of Tether and how the printing of Tether had helped spawn that particular run. And again, that looks like, you got some exhaustion there that happened. We had the capitulations that happened. Specifically the COVID capitulation, right? And then the rebound. Now, interestingly enough, too, when I was looking at the RSI, there was some interesting numbers there. So when we broke through the bottom there, through the 10, and we look at how those price points came in. The first one was something like 35, and the second one was like 45. And just doing some quick rough math, it looked like, an interesting capitulation point, if you took that as some sort of data point, would be 65 if it were to follow that same pattern. When we look at how this thing breaks down and comes back and then bounces off and moves to the next leg. It looks like we have quite a bit of data on this chart to fill in. I do wonder about that 30 range because there's a lot to be said about institutional investors coming in, about the psychological level at this 30 range. If we manage to break below that, there is not, macro view, there is not a lot on this chart until you get down to that 20 range, and it's really it's touch and go there, and you're back down.
Yeah, I would think if we did break down, I'm sure it's going to touch on all the 25, and then of course the big 20,000 is a real big spot jumping out on this chart. You saw this breakthrough that happened back in November when it busted above its previous high back from 2017 so I think if we come back to if we break through 30, we're probably gonna have to test 20. It just shows that's kind of the way it looks like.
Right. I mean, it's just the way macro view on that chart is sure as heck the way it looks. Yeah. And there ain't much there holding up 20.
Right.
And that's what I'm concerned about, especially as we're talking macroeconomics with 2023 being full on recession. We've got food shortages, supply chain shortages, war. I mean, there's so much against this going into some sort of rally anytime soon that it seems like, I mean, I don't want to be talking all doom and gloom, but
right. No, and this is good though. So what would be the price? This is going to be neat. Whatever you could drum up. If you saw Bitcoin, what would be the price that Bitcoin came down to the point where you said, man, I gotta buy some of this?
that's a good question. I mean, for me, like an all-in, like back up the truck, dump it in type number.
Yeah.
That would be anything in the 10 to 12 range. I'd probably be pretty hyperstatic.
Yeah.
Because I don't see it dropping below that.
Yeah.
I think 30 to 40% below the simple 200-day moving average. If we get
is back up the truck for you, because we're not that far away.
It's well, let's see. Our okay, so
30 to 40% below that.
Yeah, so that
20?
If you were
yeah, you're not far from that, I guess. But
no, we're not.
Yeah. How about 20% below, or I'm sorry, 40% below where we are now? If you were, I guess my number, I'll tell you now, if this hit 20,000, I think I would probably start looking in my bank account, looking across the other things I got, and saying maybe I don't think I would be scraping up a whole 20,000, but I might say, man, I think I can get maybe 10 grand, 15 grand into the So I like to think that way because you're not the only one thinking that way. We think we have original thoughts, but fear and greed, they compare. We all know the price of a car, the average price of gas, the average price of a loaf of bread. So we all think kind of like the same. And I'll bet any money if we do come to test those areas, that's where the rally could really start to bounce. And I come back to that. When something, that's where fear turns to greed. When stuff's, we see things at a discount. I go to the store, and if I see, something that I've been watching for a long time, and all of a sudden it's like this crazy clearance price, I'm like, I got to buy this. I have to, right? And that's what I'm getting at. I don't know what that price is, where it starts to become cheap, but I think for me, it's probably going to be close to that 20,000, and if it did touch 20, I'm like, how much further could it go? I guess it could go and touch the, the 15 to 12. And for sure, then that is a huge clearance price, just because we know where it's been.
Yeah, that's where I say, that's back up the truck time for me.
Right.
Right now, I tell you, in the past, I would be buying right now. This would be the time I would be like throwing a bunch of money in. As we're going through and we're looking at these charts, I'm all like, I have no reason to be throwing money in right now. I have no idea what the heck is happening.
Right.
There's some good prices compared to where we were,
right?
But
we don't.
This is just the start of where we're going.
Right. And you don't want to. You don't want to catch a falling knife, right?
No. And to Dan's point, when you look at the Gaussian channels, it is hard for it to break out. I think he was saying it's referred to as quicksand, right? Mm-hmm. And we are so far below right now, and in general, we don't see these Gaussian channels take shorter time frames. Typically they're a little bit longer time frames. There's a couple of short ones in there, but macro level, these are lasting trends for at least a little while. So
yep.
Yeah, well, I don't know. It's hard to time the bottom. So maybe once if we get close to 20, that's when you start buying a little.
Scaling in over a few month period to see, right? Yeah, and it might be one of those things. I mean, we've all seen it. It can rally pretty fast, and sometimes you feel like, well, God dang it, I missed it.
So that's part of me.
You know, it just
I'm really,
you wait for
I'm
confirmation, and you keep waiting, and next thing you know, the
just
thing
want to catch it,
rallied back up,
confirm
past where
that
you thought it was going to
we've
go, right?
exhausted, we're
I
fully
hate it. I
traded.
hate it
That's
when this
really what I'm
happens.
looking
Yeah.
for.
So that's part of me too. I'm really I'm waiting, and I just want to catch it when I know confirm that
Oh
we're done. We've
yeah,
exhausted.
yeah,
We're oversold.
yeah,
That's really what I'm
yeah,
looking for.
I think
yeah.
my
You know,
big
you know what
problem
pulled out
is
early?
maybe not the
People
entry
were
point,
like,
but the
why
exit
did I do
point.
that?
Oh
Mm.
yeah.
Pulling
Yeah.
the trigger
Yeah.
on an exit. Yes,
Yeah. Oh
that's
God.
that's been a problem as well. I agree.
Ugh.
Yep.
Yeah.
Yes. You know how many times I pulled out early,
Oh,
and
sure,
it
yeah.
keeps going and
Yeah.
going. You're like,
Well,
why? Why did I
now
do that?
the majority. I
Yeah.
use
Well,
Yeah.
then there's the other
so
side of that
for
where
crypto,
you didn't really
and I
grab
have to
any of
admit,
it.
I'm using
You
Yeah.
went up
these
and came back down.
um,
Oh, sure.
trading
Yeah.
platforms that
Yeah.
really make
Well,
it easy to
no,
get into
the
trades,
majority,
to have stops in place,
I'm
to have
using
targets in
Coinbase
place.
Pro
And
for
Coinbase,
crypto,
man, for
and
as
I
big
have
as
to
they
admit,
are, I'm really shocked
I'm
they
used
don't
to
have
using,
something a little
some
more
of these
professional. But here's what I
trading
love.
platforms that
If you
really
go
make
enter
it
a trade,
easy
you used to be able
to
to
get
have it
into trades,
preset.
to have
Your
stops in place, to
your
have targets in
emergency
place.
stop, get me out.
And
It's
Coinbase,
hands in all
man, for as
directions.
big as
You
they
can
are, I'm really
program that
shocked
in
they
so
don't
that when you
have
enter the
something
trade, it
a little more
automatically
professional.
puts
Like,
that
here's what
in
I
for
would
you.
like to see.
You know,
If you enter a trade, you should be able to have it
yeah,
preset
or even
to your
and you can have it set any
emergency
way you want.
stop, get
You
me
can
out.
have it set
It
for
went
a
the wrong
fixed
direction.
dollar
You
amount.
should be
You
able to
can have it
program
set
that
for
in so that when you enter the
basis.
trade, it
And there's a
automatically
TradeStation, for
puts
instance,
that
for
in
the
for
Ninja
you.
trader. That's
You
one of
Yeah,
know?
the
at a
things
certain
that everybody's
percentage.
familiar with.
Yes, or
Just
even
having that ability,
you can have it set
I
any
have
way you
that
want.
preset,
You
and
can
it's
have it
also
set
really
for a
easy.
fixed
It's
dollar amount. You can have it fixed on
graphical
a
user
percentage
interface where I
basis.
can just
Like
even
in
like I would on a
TradeStation, for
computer.
instance, or Ninja Trader,
I can
that's
pull
two
out
that
of
I'm
it
really
without that.
familiar
You
with.
can do that
Um,
in
just
TradeStation,
having that
and to
ability
have your
where
stop,
I
you
have that
drag it
preset, and you can
to
move
the
them really easy.
previous pivot
It's
point below the
a
previous pivot,
graphical user.
and you can move your target where you want it just by dragging it with your mouse. I tell you, if Coinbase had those kinds of tools, it would really help. I think
We lost the
facilitate
audio here.
the ability to be just to do better. You
I
know,
can hear you.
Can't hear Jay.
so that's.
I can't see the
Dang, I think I lost you guys.
YouTube anymore.
Oh, I wonder if he reached his time limit on the stream. Because we've been chatting here for a while.
I want to hear about what you guys talked about in another podcast here. It's technically is bot trading.
Mm-hmm. Yeah, the quantitative trading, algorithmic
Yeah,
trading.
quantitative trading.
Well, it looks like he's back as a listener.
Yeah,
He
sorry,
requested.
the phone just went and shut it off on me.
Okay.
Yeah, no, quantitative trading. Yeah, see that.
My phone died earlier, right as I was listening to what he was saying about.
There we go.
Set your rules, right? You can say when Bitcoin
See that is something that would really help out then, because you can set your rules, right? You can say
Yeah,
when Bitcoin crosses, or when the 50 period crosses above the 200 period, enter this trade in, right?
I need something that I can take emotions out of it.
Right. They got a couple of products out there that you can monkey with. One of them I've been using that is pretty exciting is called streak.world. And that one you can enter in rules for price entries and for exits. So let's see, I'll show you. Let's see if I go streak.world. Yeah, so this is the website. Let's see if it'll let me.
Yeah, I think I just found it here.
So it's really cool. Let's see if I can remember my own login here.
There we go.
I haven't been on here in a while.
I don't know if you guys can see.
Will it show the password? We'll find out in a second. No, it doesn't. Okay, good.
Well, I can't see the YouTube screen. stream
Oh,
anymore. I don't know if that's just my.
there we go. So I don't know if you guys can see this, if it populates.
Okay.
Did the
Yeah, so
YouTube did
this
the
is
YouTube
pretty
die on
cool.
us?
And what's cool is here's one
Can
of
you
the
see it, Mike?
but so you can go. Let me go to one of these.
Can you see it? Yeah. Mike?
I'm trying to reload it here.
Okay.
Volume pivot.
Oh, there we go. Now I
Yeah.
got it.
So this is streak.world.
So I have
And what's
this
cool is here's one I was
the
playing with
back
earlier,
test
but
that I ran.
so you can go. Let me go to one of these that I volume pivots. This one I think is pretty cool. Let's do this one. So I have this one. Here's a back test that I ran on let's go to view back test. Might take a couple seconds to populate, but here once it populates, you can see I have this set so that it has these rules, and it says buy 500 shares when the open price is equal to the low price, and this has to do with Hakanashi. So not trying to confuse anyone, but basically when we go to those Hakanashi candles, remember I said when the lower wick disappears and you have no wick, basically I told this algorithm, whenever that happens on a Hakanashi, buy this up. But one other condition I set was to make sure that the current volume bar is higher than the previous volume bar.
Okay.
Yeah. And that's where I was able to get this thing, so it basically it has this trigger that sets it. And then I on the exit I said sell those shares with a if it hits a stop loss of 20%, or if it hits the target profit of 3%. And then I went and found all these stocks that were profitable companies, had low price to earnings ratio, that all were below $50. And I went and ran I think there's 27 of them. And I ran a back test from April 23rd of last year to April 22nd is when I ran. Yep, when I ran this back test, and it was really cool because it produced. Now, it went and had 791 total trigger signals. 739 of those trades that it would have entered historically were wins, and then 52 of them were losses. So those losses were they're significant because that means that it hit 20% stop loss.
20%, yeah.
Yep.
If you would have lowered that 20%, would have if you put that at 10%, would that really you would have got out of some trades that you shouldn't have gotten out of?
Yes, and that's the trick I'm learning. So okay, talking about the quantitative thing, we might have to come back and I might have to share, because we need to do another one of these, because I have a lot of data. I have a lot of informative data for you.
Oh yeah.
Yeah, and
you made almost 58% on that back test.
Yeah, that
total.
Yeah, that
cumulative. Yeah.
Yep. Now here's the thing. I ran this thing on let's see, I told the computer, I told the software initially to run with $100,000 account. But then I said, well, wait a minute. If this thing isn't in the market all the time, it only gets in when there's an opportunity based on my rules. So that means you're not buy and hold. You're only selectively in. So I said, well, wait a minute, how low of a starting capital can I run this on? So I started pushing it. I pushed it down to 50,000. It ran fine. I pushed it down to 30,000. It ran fine. I pushed it down to 25,000. I want to say it ran. And so, yeah, it did run. So I ran it down to 20,000 and it broke. It broke at $20,000 of capital. And so then I said, okay, I put it back up to 25,000, ran the back test. It ran. So then I said, well, wait a minute. So basically, if you give yourself a little buffer, either cut down the amount of stocks or just run it at 30,000 just to make sure you don't go over. This thing should be swimming and should run fine. Think about that. I ran a risk capital of $30,000, and on a historic simulation, it generated 167,000 off of a basket of about 27 stocks across 1 year. So what is that percentage? I don't know how it, and I don't know how, I think off this, it defaulted every time I played with it. So it's saying 57%. But I think it's because it defaulted back up to 100, but I already ran it down, like I said, to, well, 30. So what's that percentage? What that's like 400% or something, or
400 or 500%.
yeah.
No, it's
Yep. So anyways, yeah, why don't we get together again and let me share my data that I have concerning the quantitative stuff. I think you guys are going to get a kick out of it.
Yeah, I'm looking forward to that. Absolutely.
Okay.
Yeah, I would really like that. I find this stuff very interesting.
Yeah. Oh man, it's so cool. I did a deep dive. We because that one we're going to be on. It'll probably take at least an hour. Just the tip of the iceberg. But yeah, let's do that. We should close up for the night, and let's plan on getting back on, and let's talk about this quantitative thing, man. I'm excited about it.
Yeah, that sounds great. You guys want to just use the? I was gonna say, you guys just want to use the texting thread to figure out the next time to get together.
Sure.
Okay. Yeah, during the week, during the night is probably the best. It's the best for me.
Yeah, this works. Okay. That works good. Yep, I agree. That works. That works better.
Okay. Versus the weekend versus like Saturday.
Yeah.
Okay.
Yeah, I can't really. Kids are just always running around during the day. Well, maybe Saturday nights.
Sure.
Okay. Yeah, I mean the weeknights are fine enough for me. I was reaching out. Obviously there's a few other people on that text thread, and some of them I text and talk with pretty regularly. So I was kind of hoping to get them looped in on some of this because there's a lot of the same conversations I'm having with them and interest in some of the trading aspects. I kind of thought we might have a few more show up tonight, but again, it's these schedules, especially when you start talking work and kids and everything else. It is hard to find time. So hopefully they'll be able to catch it on the replay here. Although we did talk for a while, so
yeah.
I have one question for you, Jay.
Yeah.
So the streak.world, can you hook that up to a trading platform?
You can. You absolutely can. You can hook it up to Alpaca, and Alpaca you probably heard of. They actually specialize. They do a lot in the crypto space, but they cater a lot of their service. They're a broker. They cater a lot of their service to algorithmic programmers and strategists. They call them quants. So look up Alpaca, and now when you are connected to Alpaca, just so you know, I think they require 30,000, and that's because they need to overcome the pattern day trading rule, and so that's something that to consider. Now there's something else we didn't even talk about it, but next time we probably should. But dabble with this. They have the free trial, and I think they go 7 days. No, actually, I think the free version might even continue. I don't think they ever cut you off. I think you can run this free. They limit, how many back tests and how many rules you can have, but it's pretty good what they give you for free. I subscribe to it personally just because I went to the deep dive and I needed a lot of back test data, so I had to really push the envelope. But yeah, toy with it and play with it. Next time we get together, we'll kind of open up all this other stuff that I've been looking at.
Yeah, no, I will. Okay, awesome. Well, hey, Mike, thanks for putting this on, and appreciate it.
Yeah, it was really good. Thanks, Mike. This is great. Yeah, it was good meeting you, Dan.
Yeah, you guys have a good night.
You too.
You too. All right, we'll see you guys.
Yep, bye-bye.
Okay, bye.